Thank you, and good afternoon, ladies and gentlemen, and welcome to the Good Energy AGM Trading Update Investor Presentation. Before we begin, we'd like to submit the following poll. For your information, throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and will publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. Finally, I'd like to remind you that this presentation is being recorded. I'd now like to hand over to Juliet Davenport, CEO, and Rupert Sanderson, CFO of Good Energy. Good afternoon.
Good afternoon. Thank you. There, because you can't see us in person, you've got a lovely picture of me and Rupert. Hello, everybody, and welcome to the Good Energy Trading Update pre our AGM today. We're just going to recap on the market and the opportunity, current performance, where we are and where we're going, and what does that look like in a post-COVID world. So we are going to start with an overview of what we've been seeing, a transition in the marketplace, the energy market, over about the last 20 years. So 20 years ago, when the company was set up, there were about 38 generators in the UK generating electricity. The thing that's really shifted over the last 20 years is that we've now got over 1 million generators, and up to, I think, 47% of the UK's electricity now comes from renewable sources. There's been a massive transformation in this market, not only on the generation side, but also we've seen significant numbers of new suppliers coming into this marketplace with new propositions and new digital performance. And what we're going to talk about is where Good Energy's role is in this market today, and where we see our strengths and where we're investing. So I've touched on some of these already, but our vision is this market moves from transferring power from large power stations down the wires to consumers to much more of a balanced market. Today, Good Energy customer is never more than 4 miles away from a Good Energy generator. So that completely transforms the way that we work in this marketplace and the way that we see energy. So it is much more about a kind of sharing platform, i.e. making sure that we can take power from power from small sites and transfer those and supply those to other local small sites. We're a leading renewable energy company in the sense that we have significant expertise within the company that particularly specialises in this decentralised market. We are one of the biggest feed-in tariff providers in the UK, which is looking after small-scale generation, and we have significant experience in trading in small-scale renewable generation in the UK. Going forward, the new grid will look very different from the old grid, and we will continue to see more households and businesses take a lead and put their own renewable generation either directly on their buildings or indirectly through private wires. And so what we actually consider is that the future looks very much more like Good Energy's model today. And in fact, we're seeing some of the bigger players pick up parts of our business model, and really we see that as how the future is going to move. All these new generators and all these new suppliers will need services in this marketplace to support their investments. So they'll need to be able to access marketplaces, they'll need to be able to access customers. And that is really the shift that we see as a major opportunity for us. It's really taking on those smaller decentralized energy players and working with consumers to match up their power demand and supply the energy to them. So the kind of 3 areas that we really see that we're going to be looking at is electricity, motor, transport and heating. And this is in the wider context of the UK's target on net zero by 2050. Our vision is slightly more ambitious than that, in that it's a road to zero carbon rather than net zero carbon. And what we're trying to demonstrate is actually we believe that on green electricity, we can move towards 100% renewable electricity in the UK. On transport, we can move to electrification of all forms of transport, whether that's cycling, for some of us who don't like cycling that much, or whether it's car transport, rail transport. And then heating, one of the biggest challenges in the UK is decarbonising the heating market. So with our green gas products, looking at energy efficiency data and alternative heating products, that is really how we see a future vision for the UK. And within that, what we're going to be doing is supporting decentralised generation for homes and businesses, making sure we can integrate electric vehicles, charging for homes and businesses, and providing access to heating care and products and heating demand reduction technologies. And that is our vision, and that's where we're taking the company from a strategic point of view. Now, to deliver that, one of the things that we have to do within our business is make sure we drive down acquisition costs, improve customer retention, and increase customer lifetime value. So those are underpinning our overall ambition in terms of the proposition sections we allow to our customers. And what we believe is that by investing in propositions and then investing in our brand, we can deliver on the first area. And the second area, we can by complementing with new propositions, we can make sure that customers stay with us longer. And then driving efficiency through some of the systems that we're implementing, we can increase the overall lifetime value. So by doing that, by bringing more compelling propositions, being a one-stop shop, doing that more efficiently through the platforms we're investing in, we can then invest in growth and brand awareness for the business. That I then hand over to Rupert.
Thank you, Juliette. Good afternoon, everybody. Just a quick look back to 2019's performance, and I'll just pull out a few themes here. So in 2019, we saw continued growth, particularly in our business supply segment, and that was the main driver of revenue increase in 2019. We continued to repay debt and maintained a good cash and cash equivalents position alongside that repayment of debt. And in 2019, similar to 2018, a relatively stable underlying profitability, whilst in both years we have continued to invest for the future. So I'll just then flick on to a brief summary of where we are in 2020. And 2020 has obviously been a significantly different year in terms of level of demand, particularly since the COVID lockdown. And we've seen lower overall energy supply volumes, and that's continued in June from the levels that we saw in April and May. We have seen increase in domestic supply as more people have been at home working, more people have been at home generally, but that has been more than offset by reductions in both our smaller and larger commercial supply segments. Encouragingly, we are starting to see the first signs of recovery as some businesses restart or increase the level of their operations. And so we are seeing some increases now within the half-hourly or larger business accounts. We have managed to reduce operating expenditure, and some of those are actions that we had planned, and some of those actions we have taken in response to and in mitigation of the reduction in business activity over the last quarter. And so we have offset the decline in gross margin with its operating cost savings. Cash collection in the first quarter and then the second quarter, so the half as a whole, has been very strong, and it has been in line with our seasonal expectations for cash collection across our major segments. And the group maintains a good cash position and a robust balance sheet as we continue to navigate what is obviously a quite changing business environment as we go through 2020. So with that, I will hand back to Juliette, who will talk a little bit about some of our investment themes for 2020 and do a brief summary before we move to Q&A.
Yeah, thank you, Rupert. So the three key areas that we're kind of working on through for the next 3 to 6 months are, first one is ZapMap. This is an investment we made over a year ago. So a well-established business that is one of the leading providers of mapping services for EV vehicles in the UK. ZapMap was a really interesting proposition to us because we saw the opportunity to integrate that in propositions for domestic customers particularly, but also for business customers. So we've already been working with ZapMap on our 1-point proposition, which is installing electric vehicle charging points for our business customers, and then integrating that information back into ZapMap. The reason why we invested in ZapMap is they have been developing an interoperable payment system, which allows you to use the platform to pay across all different types of charging points. So you don't have to carry around, if you're an EV driver, what you know is you probably have to have 5 EV charging cards to be actually able to charge on different platforms. That potentially gives an opportunity to have good data and data possibilities around that. And what we see is an opportunity to integrate some of the propositions coming out of ZapMap with our own propositions on EVs for homes and businesses. In terms of the Kraken's customer services platform, that is a platform that we made the decision at the end of last year to invest in. Really, it updates the platform we were operating on before. It allows us to get much better data. It allows us to provide better digital performance for both our customers and our internal customer services teams. It means that we've got a reduced overhead for managing customers. And one of the reasons why we invested in this platform is it really is looking at time of day tariffs. They've done a lot of experimenting on time of day with that platform, and we want to integrate that into our future propositions, both on heat and electricity and on transport. And then finally on smart rollout. So this is really rolling out smart meters across our whole customer base. One of the biggest problems with COVID is that we haven't been able to roll out smart meters. There's obviously been SMS, who are our smart meter rollout partner, have not been installing smart meters, only in emergencies. I think that's going to change from July, and we're going to start to do outside smart meter rollouts. That really fundamentally underpins our whole business going forwards in terms of data and providing data at a domestic level, at a similar granularity that we get at the business level. It also allows us to integrate that with some of the other propositions, so particularly around electricity and particularly around EV. We're looking this year to do a relatively reasonable rollout, but we are considering whether there's opportunities to accelerate that, given that the Kraken customer services platform now allows monthly billing, which if you married that with smart metering, you'll be able to get monthly meter reads, much more accurate meter reads, much better cash collection and debt collection, and a much better customer experience. So that's where we're really focusing, and the only part of that really has fallen slightly back because of COVID has been on smart. Kraken has taken a little bit longer, but actually it's relatively still on track, and we're about 80% of the way through that transformation on Kraken.
Perfect. Thank you very much, Juliet. Thank you very much, Rupert. Ladies and gentlemen, please continue to submit your questions using the Q&A tab situated on the top right-hand corner of your screen. But just while the company take a few moments to review the investor questions that have been submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. Before I hand back to Juliet and Rupert, I'd like to remind you also that your feedback is important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Juliet and Rupert, obviously investors had the opportunity to pre-submit questions ahead of today's presentation. And perhaps if that's okay with you, we can address those ones first. And then whilst after that, perhaps we can then go on to the questions that have been submitted during the meeting. Juliet, perhaps if it's okay, I can start with you. The first question here is, on the 25th of June, Good Energy has now exercised the right to increase its equity stake in ZapMap. On the 22nd of June, Apple announced EV charging to be added to Apple Maps. As Apple is one of the most popular phone manufacturers, this will likely have an effect on the user base of ZapMap. What is being done to mitigate this competition risk?
So thank you for that. And obviously, I think I touched on it partially in that the answer to that last question is that one of the reasons we invested in ZapMap was not just for the existing mapping service, which is obviously great, and the customer base that they've already got on that. So they have, I think it's about 250,000 downloads of that app. What's really interesting and why we wanted to work with the company was the interoperability on payments. So the ability for you to pay for potential ability to pay for any charging point through the app. We think that is obviously a big differentiator with just a plain mapping service. It also means that the data on the site is up to date. So you have to be able to make that to work, you have to have up to date data from all the different charging points. And I think data is going to be key here, because if you turn up to a charging point and either it's not working or it's switched off or it's not even there because somebody's got rid of it, then you're not going to use that mapping service again. And I think that's what's been really interesting about this, is that ZapMap has the opportunity to have some of the best data in the UK. So government buys data from ZapMap in terms of doing its analysis. We're seeing a lot of big companies also buy some data from ZapMap. So we think it's about the data on this as much as anything else, and that is how ZapMap will maintain its competitive position.
Thanks, Julia. That's very kind. Thank you. The second question that we have was that came in was, given the issues implementing the old billing platform in 2017, what steps have been taken to guard against this with the migration of customers to the new Kraken platform? What benefits does the Kraken platform bring to Good Energy?
Okay, thank you. So the original transformation we did in 2017 was to a system where we did a big bang approach. So we switched one system off and switched another system on. And one of the biggest issues with that was that we really, when we switched the new system on, there wasn't any ability to test different cohorts of customers, different types of payment schemes. And when we did it, so we did a big post-mortem on that before we went ahead with the Kraken investment, really to understand where the hitches were and where we got it wrong. I think we've learned pretty well from that. So the Kraken system was an agile implementation, i.e. we transferred certain types of customers first. We cleaned up all the data as we went along. We understood where there were any problems, and therefore they were in very small numbers of customers, so we could fix those problems. It doesn't mean it's gone off with no hitch whatsoever. There have been backwards and forwardsing, but we seem to be, on the whole, moving forwards, and we're now at about an 80% conversion with billing going forward.
Thank you. I guess a follow-on question here. How has the current COVID-19 crisis affected the business operations?
So the first thing, obviously, with COVID-19 was to get all our staff safe. So we took the decision, actually, the day after lockdown was announced, to send everybody home and really sit back and strategically work out what we were going to do. By the end of that, we had everybody working at home remotely, which made the rest of us feel very comfortable. It meant that all our staff could self-isolate. Nobody was forced to come into the office, and everybody was working. So from an operational point of view, we were up and ready fairly quick. Obviously, I think I've touched on it did slow down Kraken slightly in terms of the implementation, because obviously people were working remotely, getting the data sorted, making sure everything was working. It took slightly longer. Smart meter rollout has been delayed as well. The other impacts we've seen is domestic customer usage has gone up slightly during COVID, and we've seen business customers drop quite significantly. So overall, we've seen a general drop down. I think the UK's total demand during the last 3 months has been down by about 13%, and that's pretty much reflective of similar levels to where we are. So those have been the main impacts of COVID.
Thank you. Another question that was pre-submitted ahead of the meeting was, what additional opportunities are you seeing as a result of some of the weaker suppliers existing in the market?
So obviously we're seeing from the market point of view, we're seeing some consolidation in the market, and we're seeing potentially a reduction in competition. Our regulator has been keeping a very close eye on this and has been asking for weekly updates from most of the players to keep an eye on debt particularly, and suppliers being able to cope during this period. I think from our point of view, how does it impact us? The opportunities really are, one of the things we've seen is that originally the differentiator on price was really quite large, so the lowest priced products in the market were very, very low. That is starting to shift, and you're seeing the market come much more levelized across the board. So potentially there's some opportunities in terms of price elasticity, and also we always keep an eye out in terms of whether there's opportunities to pick up customer bases as people are exiting.
Thank you. We did actually receive a specific question about COVID-19. How is the current crisis, COVID-19, going to impact your smart meter rollout?
I think I've touched on that already. I mean, essentially, 3 months it's been suspended. We're going to start back now in July with just external meter replacements. And then as time goes on, depending on what the lockdown relaxation says, whether people are comfortable with metering installation coming into their homes. We are reviewing it at the moment to see where there's opportunities in smart, given that we've now got the Kraken platform virtually in. So yeah, we're hoping that actually smart is an opportunity for us this year.
Thank you. Rupert, maybe perhaps I could turn to you with this one. The big four auditing companies have already been discredited during the financial crisis in 2008, and their inability or unwillingness to protect the weakness of certain companies. Now, this has been confirmed with the Wirecard collapse in Germany, where it appears that the long-term fraud was involved. The auditing company, Ernst & Young, only discovered problems during the last audit before the collapse of the company. Why does Good Energy collaborate with Ernst & Young?
So we read this story with interest, as EY have been our auditor now for 3 years, and I actually took the opportunity yesterday to speak to our audit partner in relation to the issues that appear to have contributed to the failure or failing of the Wirecard business in Germany. This is obviously part of EY's international operations, but very much part of their German operations, and we haven't got an awful lot of detail on it. However, our partner has given me positive affirmation that the areas that we believe are sort of relevant are certainly ones that are fully covered within our audit, and we do not have any concern about the overall quality of our audit. We will, of course, continue to monitor the situation and see how the situation develops over the course of the next weeks and months.
Thank you. Another question, obviously pre-submitted. Good Energy states that it's an ethical company. In my assessment, an important aspect of being an ethical company is the publication of the pay ratio between the highest and the lowest paid employee in the company. When will Good Energy publish this pay ratio between the highest and the lowest paid employees?
So I asked a question on this, and I think, as far as I understand, we did publish it last year, and it's an admission that we haven't published it this year. So we will look to publish it this year. I think we're fairly comfortable looking at the ratios between our senior exec and myself included, and our lowest paid. And I think, I can't remember, there's a guidance by one of the public bodies on what that should look like, and I think we're well within that. So yeah, very happy to publish that data.
Thank you. Of course, investors can ask all the questions, and the next one that we have in is do you appear, you do not appear to offer any shareholder benefits. As one of your small energy suppliers and consumers, I'd like some sort of small supplier benefit, such as a handful of free shares each year, perhaps based on an annual power output or visits to wind or solar energy production farms. National Grid does this, and they are very popular benefits.
So I can't comment on what National Grid does, but obviously from our point of view, we are a listed company. So therefore, if anybody wants to buy shares in us, they're very welcome to. So that's great. From the point of view of actually giving shares out, this is quite a complex process. We have to issue shares and then decide how those are given out to shareholders. We have to consider existing shareholders and the impacts on them and the dilution impacts on them. So our preference is to do a great proposition that supports those customers and those small generators and suppliers in what they do. And then if they feel so inclined that they want to invest in Good Energy, then they may do through the platforms.
Thank you very much. This is the final question, Rupert. Perhaps I can address this to you of the pre-submitted questions. Is there any further update on the dividend?
There is no further update at this time, but I'll just go back and restate or summarise the comments we made at publishing our annual report just under a month ago. So we said that we would review the position on both the deferred dividend and the annual staff bonus in September of this year, and look at it in terms of the company's overall cash liquidity position at that point in time. But also there's a lot changing within the wider economic outlook, and we will continue to monitor the impacts on households and businesses as the next few months develop, and we see the response of those groups to certain relaxation of the lockdowns and other initiatives put in place by the government. So we will continue to monitor it, and we will obviously review it over the course of the time between now and September, when we'll give a further update.
Thank you very, very much indeed. So that completes all the pre-submitted questions that investors submitted ahead of today's event. Perhaps if we could just move on to the questions that have been submitted during the presentation today. I think, having looked across some of the questions submitted by investors, that I think we've probably covered some of the responses to those questions through the pre-submitted questions. So if we don't address that particular question, obviously we'll review everything post the meeting and obviously publish appropriate answers where it's appropriate to do so. So coming into today, we've got a question here from Jake D that says, the clean energy sector is always evolving. Is there any key new technology that is driving change that Good Energy can particularly benefit from?
So I'll take that question. Thank you, Jake. One of the things that we're seeing is it's less about a particular technology. It's more about how you integrate that technology into a system that we're really seeing innovation. So we're seeing quite a lot of system type innovation and really challenges to regulators to think about innovative ways of making sure regulation supports innovation. In particular, one of the projects that we did last year was a vehicle to grid a charging point where you actually access some of the national grid benefits as a result of plugging back in and supplying power the other way from an electric vehicle. That particular type needs a change to the regulation really to make it work. And I think what we're seeing more of is less technology led, more now pushing the regulators to actually integrate this and come up with innovative products that allow us to invest in these technologies.
Thank you. We've got a question here from Reinhard H. Reinhard asks, does Good Energy intend to get involved in hydrogen technology? This means to use the hydrogen for households instead of natural gas, and for mobility, the hydrogen will be produced from PV systems.
So we are investigating hydrogen as we speak. So we have two projects going on. One is a review of the hydrogen market in the UK and the potential to inject hydrogen into the gas grid. We have some pretty kind of round figures in terms of what that might look like. We estimate you could probably inject up to 20% volume of hydrogen into the existing gas grid, but that would be significantly lower in terms of energy output. But that's part of the research we're looking at. I also sit on the government steering group on hydrogen, which is looking at sort of how to introduce hydrogen into the UK economy. So right now it's a watching brief. We would like to see a market developed through Good Energy for hydrogen being supplied as a heating fuel. And we are working through what does that need to take, and what changes do we need to see in the legislation, and what changes do we need to see in the technology. So the answer is yes, but we don't have an answer today.
Thank you. Another question that was submitted by Nick. Nick asks, are further infrastructure investments high on the agenda, or are you looking to partner for further larger scale generation assets?
So right now we don't have an asset development team, so we tend to work in partnership with new developers, and that is bringing fruition. So we're working with two brand new development sites in the UK, I think both in solar. We're also developing our proposition for small-scale solar export, and that's coming forward at this moment, probably launching that in sort of early autumn. So really what we're trying to do is make sure that we're bringing the marketplace so that people can invest in these new sites, but not necessarily having our own team internally.
Thank you very, very much indeed. So I guess there's I just want to confirm there's a couple of questions that have just come in. We've got one from Nitin T, who asks, Kraken IT system is owned by Octopus, one of your competitors. Why did you choose it?
So we have been, when we originally came into the marketplace, we actually developed our own IT system. And there's big challenges in terms of actually how you deliver IT in the UK market, partially related to the fact that it's been set up in a relatively complex way. And so over time, we've been looking for a system that allows us to bring in our small-scale renewable generation, that allows us to do smart properly as we see it, to really offer demand-side response and time-of-day tariffing, that really allows us to provide a digital service and customer experience that we want from our customers. So I think from our point of view, when we looked around the marketplace, one of the things, so we've sort of been talking to Octopus for quite some time. They came into the marketplace really to demonstrate their IT system and develop the background of the CEO and the senior team is IT development and bringing disruptive IT technologies into different marketplaces. And they saw the opportunity in the energy market to disrupt from an IT point of view. And so we were really pleased to be their first partner on this. Since then, they've actually signed up E.ON as well to this technology base, and I think are then a large Australian supplier as well. So the good thing about them being in the market is they understand all the difficulties, they understand the practicalities, and they have immediate feedback from their customer frontline and their propositions teams in terms of what's working and what's not. That allows us to use all that experience that they've got from that and then build our propositions on top of that.
Thank you very, very much. Just like I said earlier, obviously we've had a number of questions that I suspect we've answered through the pre-submitted questions. So if we haven't read your question out, obviously there are commonalities between the themes. We've got a question here from Saulius, if that's how I pronounce it correctly. Apologies if it's not. Have you restarted debt collections? What was the start in line with your expectations? Have you witnessed that business is open as usual post-lockdown has been lifted?
So let me try and answer different aspects of that question. So debt collection can take a number of different forms. The main area of debt collection that was paused during the lockdown was around the sort of escalated debt collection. So that would be potentially the outsourcing of some of the activity and some level of face-to-face visit. Those have been ceased and those haven't restarted yet, but they will restart as effectively those processes get up and running with the suppliers that we use, and we would expect to do that relatively shortly. The other areas of debt collection have substantially carried on as usual, but it's been a little bit more focused on making sure that customers are using or have used what we have estimated that they will have used. So some of their businesses may have reduced operations. Some of the businesses may have substantially ceased operations and therefore only using a minimal amount of power. Some will have actually increased their business activity. So there's been a proactive response or proactive effort to actually understand the different segments of those business operations and the business accounts that we have in order to have the most appropriate interventions with you. As you'd expect, we have been very heavily focused on making sure that customers who can pay continue to pay. There are some challenges with businesses operating remotely and being able to access the right staff in those businesses, but generally from the cash collection performance that we've had over the course of the last 2 to 3 months, we're pretty comfortable with the work that we've been doing across those different dimensions of debt collection and debt activity over the lockdown period.
Thank you once again. We just had a question coming from Stephanie F. Stephanie asks, how prepared are Good Energy to pay for renewable obligations and other regulated charges later this year?
So on the renewable obligation, we're very different from the vast majority of energy suppliers in the UK. We pay for our renewable obligation certificates, our ROCs, as we go through the year, because we buy the power from independent generators, and we pay them for their ROCs depending on their output. So we don't wait until the August period when most suppliers enter what's called the ROC buyout, where they have to effectively pay for a year's worth of ROCs all in one go. That is the cause of a substantial number of supplier failures that we've seen over the course of the last couple of years. But we treat that activity very, very differently. So we will have paid for all of our ROCs from those independent generators ahead of that annual compliance. In terms of the other regulator charges, so we continue to pay all of those charges as usual. There are a number, as you probably, I sense from your question that you are aware that there are a number of different types of charges that we make at various points in time. We continue to pay for those on a normal basis, and we will continue to pay for those as we go along as normal. So there is no change from our perspective in terms of how we would normally operate and pay for the normal charges as we go through the course of the year.
Thank you. Julia and Rupert, thank you so much. I think you've addressed all the questions that have been submitted today. Obviously, there's a couple where we think that there is an overlap in questions that were already answered. However, if that's not, obviously, we have the opportunity to review those post the end of this meeting. I don't know if you just want to perhaps wrap up, and then perhaps I could redirect investors to provide you some feedback.
Thank you. Yeah, so I mean, I think in general, what we're seeing is the energy market is continuing to move on, although we've obviously seen some reduction as a result of COVID. We are now seeing some form of step up, and we're seeing energy demand really return to pre-COVID levels, or be in that direction at the moment. Overall, strategically, we're moving in the right direction. Some projects are slightly behind, but generally we're keeping up and we're moving forwards. And then I think a lot of the questions were around what are the opportunities going forward, and that is part of the work that we're looking at right now, which is to go, what is the zero carbon Britain look like in 2050, and therefore what are the technologies that people are going to use in their homes and their businesses to get there, and that's the exciting piece that we're looking at doing over the next couple of years.
Thank you, and particularly thank you for updating investors, and particularly given the ability to, I guess, ask questions and get the clarity they need. And I think that's particularly relevant given the current restrictions on you as a company and many other companies with regards to attendance at an AGM. So I think it's been a very useful exercise to give investors the clarity that they need. Could I ask investors not to close the session, as you will now be automatically redirected for the opportunity to provide feedback. If you access this meeting from our platform, the feedback page will appear. If you accessed it via the URL link in the email, then you'll be asked just to log in and give your feedback. We'd be grateful if you could do that. On behalf of Good Energy, Julia, Rupert and Investor Meet Company, I'd like to thank you all for attending today. That ends today's presentation. Thank you once again.
Thank you.